Sorry guys, my mic was muted. Could you guys hear me now? Sorry guys, my mic was muted. So my bad. That was man, I was just talking to myself this whole time. All right, guys. Good afternoon, everybody. Today is Monday, July 11th. It is 2:06 right now. Sorry, guys. My mic was muted this whole time, so I was just kind of talking to myself, I guess. But you guys could hear me now. Thanks. I literally just saw the chats. My bad, Pat, Rashida, everybody who thought that it was just broken, but it's working now. But yeah, guys. For this mentoring session, if you guys have any questions, feel free to put your questions in the chat. I'm here to help you guys out. So whatever you guys need help with, feel free to just drop your questions in the chat, and then we will move forward with whatever question that you guys have. I was just looking at gold right now, and I was saying that it's been hitting like super often. So what I might do with my back test is I kind of want to go back and just pull up random days here. So I have like no bias in regards to like what trades I'm looking at. So there's one here on like June 17th, V3 right there. I probably would only be taking trades in the direction of the trend though. So using the trend meter right here, is that a big one? No, not exactly. It was close to it, but not exactly. So there goes a V1 entry right there. I mean, it looks like it works pretty good. Rashido's onto something with this. I think the good fixed TP stop loss would be about 300 pips. I mean, this would be a cool set and forget strategy. Yeah, straight to TP right there. Pretty solid. Probably need a pending signal though. Or I don't know, maybe we could take it without a pending signal. No, looks like a pending signal will be required. Anyways, I'll come back to that later. So let's see if there's any other questions here that I'm missing. So we only have one question right now. A question from Fraser. He's asking, hey, Sean, I've been planning for the FTMO challenge. I have some concerns. I'm having some concerns for scalping with a TP stop loss of 100, 300 with 1% risk per trade. I need to win 25 trades with no losses in order to hit the 10% profit target. The challenge period is, it feels ambitious considering one loss wipes out 3 wins. Do you have any advice? Is this a realistic approach to the challenge? So I think, well, you'd have to be risking more, Fraser. You can't be risking 1%. I mean, it's going to be impossible for you. You even said it yourself. You would have to be risking more for you to reach that goal. So you'd have to risk about like 2% per trade. So if you're doing 2%, here, let's just put it this way. I'm trying to figure out, so what account size do you plan on doing? Because if you're doing a 200K account, like how I'm doing, you know, if I'm doing 1%, if I'm making like about 1,000 per trade divided by 200,000, it's like half a percentage, right? So you'd probably have to use a bigger, I mean, depending on which, there's going to be a couple of different factors, like how many trades do you plan on taking, and then your account size. So you're doing a 50K account. How many trades do you plan on taking? Because the thing is, I tell people to take one trade, but realistically, people aren't taking one trade, right? Like you could say you're trying to take one trade, but realistically, you're going to take like maybe 2 or 3 trades. So if you're taking 2 or 3 trades, then yeah, you're gonna have to. You can use that lot size or that risk per trade. But if you're only taking 1 trade or 2 trades a day, like I am, you can increase it because your daily drawdown is 5%. So you can risk a lot more, right? So realistically, you have to think about how many trades you really anticipate on taking. I would prefer to just take 1 or 2 trades with manageable risk. So if you were to do that, then you could risk about 2%, right? So if you're doing 2% risk, So you're doing a 5. Let me go over here to a cleaner chart. So Fraser FTMO 50K challenge, right? Your goal is going to be 10%. Okay, per scalp. I mean, and so this depends too on which scalp you plan on doing, right? If you plan on doing, like, you have to like determine, or you have to like predetermine which trades do you plan on taking. If you plan on taking the daily in or the breakout, then you're not really going for a 1 to 3 because you're going for a 1 to 1. You're going for 500 pips. It's a huge difference. So the thing with other people in the group is they mix and match, right? Sometimes they take the breakout. Sometimes they take, typically what people do when they're trying to pass a challenge is they will take breakout and then they'll take one scalp. So breakout is 1%, 1.5%, right? That's going to be the breakout. Scalp, depending on which one you plan on doing, is going to be, and this depends on how many trades you plan on taking. If you just plan on taking one scalp and no breakout, then yeah, you're right. It's going to be impossible for you to reach that goal because you're not going to be able to reach the whole percentage of that. Let me see. Fraser said just wary of the full breakout and how the market is at the moment. Yeah, the breakout's probably not the safest trade to take at the moment because there's no clear direction typically when the market is open. So if you're not going to take the breakout, and I don't blame you because it is a risky trade to take right now. Before, people would take the breakout and they would take like one scalp and then they would be perfectly fine because they would be up like, what, 2% a day. If you plan on just taking scalps, then you're going to have to increase your lot size a bit. So like instead of risking 1%, you're going to have to risk, and this is per day, 2% to 3% per day, right? So the thing with your that you're worried about with this is basically reaching your goal before it reaches your your final day. The thing that you need to also understand is that you get an extension. So say if you're like close to the 21 trading days, but you're in profit like 5% or 6%, they'll extend your account. So you don't have to worry about that. I feel like a lot of people worry about that because they think that there's a deadline, right? There is a deadline, but the thing is, if you're doing it consistently, so say for example, you said you have 21 days, right? 21 trading days total. And each day you are aiming for 1-2%, right? So if you're aiming for 1-2% each day, 21 divided by 2, typically you need about 10. You need 10.5 winning days to pass, right? That's pretty much how much you need. If you're going for something higher, let me see. So I'm trying to figure out the sweet spot for you, because it's during your challenge, you're gonna have to take more risk than you would once you're funded. Like for me, I don't have to take as much risk because I'm already funded. That's why I can take like 1 or 2 trades and just lock in 1,000. But with let me see what Pat said. Sorry. Yeah, Pat said, Fraser, on the 1 minute scalp at 50K, you would need to win 10 of 500 TPs to make your 5,000. So you need to win 10 trades with a stop loss of 1,500 and a TP of 500. That would work out to be 3% risk to make 1% profit. I think my math is right. And I think you're right too, Patrick. With above math, you can take a trade every other day as long as they'll win. Yeah. And I agree with that too. And that's what I was trying to get to over here. So basically, what Patrick was saying was that you have to take a lot size where you can risk. I mean, you're basically risking 1,500. So if you're to take a 5 lot, and I'm assuming that's what it is, right? So you're taking a 5 lot times 100, you'll be making approximately 500 per trade. You're taking a 5 lot times 300, basically risking 1,500 per trade. So the thing is, if you can focus on just taking quality trades and not just taking random trades, this is, I mean, that's really all you need to do. So like to reach your goal within the allotted time by using a 5 lot, you will take a profit risk of 500, 1,500. And let me read the rest of your question here. And Fraser said, and by trading every other day, I can really prioritize quality entries. Yeah, and exactly, Fraser. And that's the key thing here. So I feel like the problem with a lot of other traders is that everyone wants to pass their challenge right away, right? Like they want to pass it within like 10 days because they see people pass like immediately. Realistically, you should just take your time, because even though you have 1 month, or I guess a total of 21 trading days, your challenge will still get extended if you're in profit. Like if you're in profit at a certain amount, they'll add on like another 30 days. So, and if worse comes to worse, you'll just get a free retry, right? So the main thing here is just to focus on quality trades. So if you can focus on taking 1 or 2 trades a day or even every other day that wins, then you should be perfectly fine with passing, right? And if you don't get to that point, you should at least be at a point where you can get a free retry or an extension. Because the thing is, if you're just taking the trades that we take on the live, or you're taking stuff that's very high quality, it shouldn't be a really big problem for you to either be in profit or be at break even. Because we don't really lose very many trades, especially on the live. If you only take the trades that I take on the live, then you should have like no problem at least either passing, either getting an extension, or getting a free retry. Because the thing is, like, I don't remember, like, whenever I give you guys a trade or I tell you guys that I'm going to take one, it's only because I'm like super absolutely sure it's going to win. If anything, you'll have maybe 1 loss for the entire month. But for the most part, you probably won't even have any losses as long as you just take your time with it. Don't force any trades. I'd probably recommend not trading during Asia. Just trade what we do during live, and just take like the very best trade. Some days I'm not going to take a trade, or I'll give you guys a trade and I'll tell you, okay, I'll probably take this for a partial move. And then you can make your adjustments for that partial move, right? Where you can take a higher lot size to just go for a quick 100 pips. So it's just going to be, and I can't guarantee that this month is going to be great. We're in the middle of summer. So you can see how the market starts to move. Like it's not moving as smooth as it did back in like February or March, right? It's like kind of all over the place with a lot of ranging, right? So like, for example, right here, a huge range, price pushes up, range, range, range. And then here we are again with another range. So I can't guarantee the market's going to be smooth as it is every month or every other month. But for the most part, as long as you just avoid losses, I think that'll be the main key for you, Fraser. And I know you really want to pass, so, and I know you're a little more disciplined than others too. So what I would recommend is to just stick to the lives for now, pass your challenge, or if you're not ready for the challenge yet, do a trial. Do a trial, but treat it as a real challenge. And if you pass that, then you'll know that you're ready for the real thing. So yeah, no problem, Fraser. If there's any other questions that you have regarding that, feel free to let me know. I know it's a little confusing when you see it here on the chart, or if like you're not putting it into action. But once you actually start doing it, you have a set lot size that you use for every trade, then I think you should be fine. So you can use a 5 lot, use between a 2.5 and a 5 lot for the for any trade that you're taking with a 300 pip stop loss. I think your max loss for, calculate that real quick. So if you're on a 50K account, times 5. Okay, yeah. So if you're planning on just taking one trade, this would be fine. But if you plan on taking multiple trades, then take half of that. So if you're just taking one trade, 5 lots, perfectly fine. Like one really good trade, that's fine. But if you're taking like 2 okay trades, then I would go with a half lot size, 2.50. But yeah, I think that's it with that question. You know, it's hard for you to like really prepare for it. You have to just you have to do it. And once you do it, you'll see how simple it is with the with the trades once you're like able to focus on just like one quality trade a day. Maria said the problem is a daily drawdown. Well, I mean, that's why you're using a proper lot size, Maria. The reason why a lot of people have problems with the daily drawdown is because they don't use a proper lot size, right? You know, you can't use a 10 lot if you're on like 50K account. Like I'm on a 200K account, so I can use that lot size and I could still be okay with the drawdown. If you would like understand how much risk you're putting in before you enter the trade, then the daily drawdown shouldn't be an issue, right? I think a lot of people take like random lot sizes and they don't realize like how much is at risk. And that's why daily drawdowns get hit. Because like, for example, the numbers that we just gave Frazier over here, this is perfectly fine because if he's losing 1,500, his max daily drawdown is 2,500, right? So it's impossible for him to hit that point as long as he stays within the parameters. If he doesn't move his stop loss wider, if he doesn't increase the lot size, then he's perfectly fine. Right? Because he can lose up to this much. So if he's only losing 1,500, he should be perfectly fine. So you just got to make sure that you're within those parameters, and you got to make sure that you don't increase your lot size and you don't move your stop loss too far out. Like once you set your stop loss, if you take that loss, take the loss. Don't try to fight it, right? Because if you try to fight it, then that's when you start to get close to your daily drawdown limit. Yeah, and I agree with you too, Patrick. Yeah, Patrick said daily drawdown for 50K is 2,500. So above the risk of 1,500 still works. Yeah, I mean, you guys can get really close to it. I just don't recommend getting too far, like too close to it. Like 1,500 is cool. If you're going for like a loss of like 2,300, you're really pushing it, because if you go off by a little bit, then yeah, you're gonna hit your daily drawdown, especially if there's slippage. So just something to keep in mind. So let me see if there's any other questions here. I don't think there's anything else that I can see. But yeah, thanks Patrick for the help on that. I know you guys know my math sucks, so I'm glad that Patrick here was able to break it down a little better. Yeah, appreciate that, Pat. So, all right, guys, I don't see any other questions here. If you guys have any questions, feel free to put them in the chat. You know, I'm here to help you guys out. So unless you guys have anything that you want me to cover, you know, that's how long our session's going to go for today. Otherwise, I'm going to go down gold real quick. Just want to see, I'm like purposely looking for a bad trade here. Like I'm purposely looking for a losing trade here so that I can see, or I can kind of gauge what needs to be done. Like, I'm not sure if the sessions are really even necessary for gold. I know that they still play a part, but I just want to see if they're even all that necessary. So just looking at this here, I pulled up a random date. This is June 3rd. We have one V1 right here. Looks like it would have hit full TP. All right, so right there, right here, it looks like it might have been too close. Yeah, so I think, I don't know, 300 looks kind of fine, but maybe 250 might be better for the 10-minute. Yeah, 250 would have played out right there. Let's see if there's another one right here for V1. Actually, this wouldn't be a V1 right here because there's no pending sell. So actually it would be a good V1 right here. So it looks like 300 is fine as long as we have that pending momentum. It's none here, no pending momentum. This has a sell signal on it, so no entry off that. one right here. I'm like really intrigued to play around with this. Another winner right there. Let's see. Patrick said, Sean, would you run a 250, 500 pips TP stop loss considering the larger move on US 30 requiring 500 pip stop loss? Let me see that question again, Patrick. Patrick said, Sean, would you run a? Yeah, no, definitely. If you see a bigger move, oh, you're talking about for gold. Gotcha. Yeah, no, technically you could do that. You could do that as well. So initially that was kind of like what I was looking at. Patrick, I was looking at the 250 to 500. But then I think a 1-on-1 would be a lot better. I mean, it's really up to preference, right? Because either or they would work. I think that would give you the cushion where you like almost for sure would not get stopped out. But I think, yeah, I mean, it just would really depend on like what we could find here. I think what I would like to personally look for first would be like a 1-on-1. If we can't find a 1-on-1 that's good, I think right here, 300 pip stop loss, 300 pip TP looks fine for fixed TP stop loss. This looks good right now, right? So I'm personally looking for like bad trades so that we can see if there is something that we can do differently. So again, like right here. Because the thing is, if there's going to be phases where like we're going to have a lot of losses, then yeah, then maybe we need to spread out the TP stop loss. But yeah, looking at E over here, E said maybe try out 5 and 15 minute. It could work better. I've tried some on the 5 on 150 both ways and it works. Yeah, so there's a lot of different ways to apply it. I mean, if you want to apply it on different time frames, you can. But I think for now we have to find like, well, for me personally, I have to focus on just one time frame. If you guys want to test out other ones, like E said that he's been using it on like the 5 minute and 15 minute, and it works well as well. I mean, you can do that as well. But I think for me personally, I'm going to stick probably with the 10. And then once I figure out a good range on the 10, then I can move down to the other time frames. I just haven't traded gold in a long time, so I don't know it's a good range for it. But it does look, let's see. It's like another V1 over here for a buy. That was good, full TP right there. And if you guys are not familiar with the strategy that we're applying the V1 just on a different time frame. This one right here. Without the overall bias. So we're gonna have to change a couple things here. Yeah, I think so too. So E said, I think using the trend meter as confluence is key. And I agree too. That's basically what I've been using here. So I'd have to change some of these up a little bit. So let's see, we'll just change this to K2 10 minute. Variation V1 gold strategy. So I don't think we'll really use this. Confirm trend using trend meter settings chart. Save this as 10 minute. Yeah, because I did see some of you guys also try it on different assets as well. Like E over here said, also should check it out on other pairs like GU. Anything that has a strong market sentiment, it seems to work very well. Same parameters. There's a lot of entries on GU past day. Yeah, I could probably see that too because I did notice that as well. I mean, I've been trading GU myself. I trade GU and UJ using the 15-minute strategy. And they've been working pretty solid. Let's see. Yeah, Frazier said Kevin seems to have some knowledge on gold. He might have an idea how a good range. Yeah, I'll probably message him and see. Yeah, Rashida said it also works on GJ. Yeah, a lot of the major pairs and the JPY pairs, they work really smoothly. Like for me, I've used it on GJ. Sorry, I've used it on UJ. I've used it on GU. And it looks like Rashida here also used it on GJ. So basically all the JPY pairs and the major pairs. So like AUD USD, USD, JPY, Euro USD, GBP USD, basically anything paired with USD, it moves pretty smoothly. So I'm gonna go to a random date again. Cause I'm like, I kind of want to like, even though we're looking for the strategy to work well, I'm looking to prove myself wrong. So I want to go to a random time and just see where the strategy doesn't work. Cause then we got to figure out that's like where the real strategy mastery comes from. Because if you can figure out where it doesn't work, you can find solutions to it. So just looking at this right here, it's another V1. Another full TP for a fixed. Or actually, it's not. Looks like this one might have lost. So this is one that I'm looking for here. Actually, no, would have hit TP eventually. So it did retrace down a little bit, but it did come back up and hit full TP. There's also another one right here. Full TP off that. Yeah, I'm seeing super accurate. See if we can find another one. Yeah, another one right here. These are like back-to-back wins. It looks like the sessions don't even matter for the gold. So I'll just take that off. I'm gonna take off the pivots too. It's kind of relevant. But yeah, basically another high-low, another V1 right here. And this is a random date, May 24th. It's another fixed TP stop loss, 300 pips. Yeah, full TP. All right. So I'm just doing a blind back test right here, guys, to see if there's anything that we can find here that would be useful for us. Another one right here. 300 pips. This one got really close. Stop loss. I don't know if it would have hit though. So yeah, eventually this one would have hit stop loss. So this is like the first loss in like a really long time. That would have been a loss. See if this would have been a loss too. No, it didn't line up. So it looks like there was a couple losses right here, back to back. I'm trying to figure out like if there was something here that was causing losses to happen, or if something else should be used. So maybe the pivot should be used to identify these entries here. All right, let's see. So there's like one loss right there. I don't know if this lines up with it. If that considered a double body, I lost two. Or actually, no, this would have been a win. So there was one loss, one win. I mean, actually, it doesn't really matter too much. This would have been a win too. Because if this is one loss and we have two wins here, we would have covered it with one win, and then the other one would have been a win as well. Like it brings us back into profit. Yeah, CT said trading markets make things work. Key thing is finding what it does in a sideways market. Yeah, exactly. So let's see if we could find that CT because I'm really curious. So let's see. Sideways market right here in April. So I'm just going to do a blind test right here. So we're looking for sells because the trend meter is right there. This is a sideways market. We have a short position right here. I'm just curious to see. Does it play out? Stop loss. So this is stop loss right here. We go back a little bit. So this one right here would have been a loss. Let's mark that as a loss. Or I mean, I think during a sideways market, we might just have to adjust the TP stop loss. That might be the key. Yeah, because that would have been a loss right there too. See how far does it go down for? So I mean, we could always adjust it to a smaller TP. If we do 200, 300, that would still work. Let's see this one. No, this would have been a loss too. So that's right. CT, it was on point with that right there. So we have two losses right there, I guess. It's better to count these losses to identify. Or the thing is, I mean, you can just eat the losses, I guess, if you're doing a 1% risk and see if it bounces back. So it looks like here, CT, there's two losses there for using a 300 pip stop loss. There's two losses, but one win here. So let me just mark up the two losses that happened over here. It goes this one. Man, I hate when this tool doesn't draw the right arrow. All right, whatever. I'm just gonna draw my own arrow. So if this is the case where we have two losses like this, but we have a win right after, I mean, I'm fine with eating the loss and then continuing on. Let's see the next one here. So at this point, the trend meter is blue, so there's no entries. Trend meter is now, so this right here, there'd be no entry because we need the trend meter to be red. No entry here. Is that a double body, double wick? I don't think so. No, it was close. Not exactly. I'm actually looking for buys here. All right, so right here, we shifted to a buy. Actually, there's no buy. There's no pending signal for a buy there. No, it would have hit. So we need a pending signal. Pending buy signal right here. Lost there again. I'm trying to figure out like if there was anything going around this period. It was basically April 25th. Let me check the news real quick, see if there was anything on that date. And this is how we backtest, guys. So like a lot of you guys wonder, like, how do I go back and find specific things in the market that I'm looking for? This is how I'd go back and backtest. I just go back and see what happened during that day. Looks like this entry came up at around lunchtime, noon. Yeah, nothing specific on that day. It was an Italian bank holiday, but nothing specific. All right, so we had a couple wins here. Another loss right here. It's like price shifted back down. No signal on that. Now looking for a buy. The thing that you guys want to keep in mind is that gold is a very tricky asset. This is why I don't trade it, because sometimes you'll see something that looks really good and then eventually it just stops working. It's like a V, another V1 right here. This would have been another loss. There was actually news around that time though, so maybe time to avoid trades around this period. So this is what I'm looking for, guys. I know like initially we saw really good trades. Now that we're seeing losses, we kind of want to figure out like why these losses are happening and how can we avoid them. Looks like for this right here, one of the main things to avoid would be news, because price looks like it was pushing up. And then as soon as it got to news right here, came crashing right back down. Let's see. Yeah, E said, or 500, 300 make better risk toward, make it able to take all, but would suck if whipped out. Maybe try. Yeah, it might be better. Well, the thing is the 10-minute works really good right now, but I think during ranging markets, I think maybe the higher time frames would be better. Let's see. Patrick said, is there a way to get the news badge to come up on a US 30 chart? I think they do come up, right? Or they don't. I thought they did, but yeah, that's weird. Go to settings. Symbol. Yeah, that's weird. I thought they did have news on here before. Yeah, I don't think they do, unfortunately, Patrick. That would be nice though. Um, that is weird though, because yeah, let me go over to gold again. I knew that there was an option here where it'd say to, oh yeah, so the events don't show up for US today. They show for gold. They show for basically Forex pairs, but not for yeah, you can see that tab here comes up. It says events. But on US 30 for some reason they don't have it. Yeah, unfortunately not. Yeah, it would have been nice though, right, Patrick? So we know to avoid trades for sure. Um, yeah, so I think that'd probably be, I mean, our best option. Like, if we do find a ranging market, or yeah, maybe the 15 might be better. So like we got a 15 over here. Yeah, the 15. Let me go find, I'm gonna go and rewind to like an area where price is ranging. Right, so like this area right here, I'm just gonna go and replay it. Because we could already see that it is and was ranging, so nothing right here. Here goes a V1, short position, 300 pips. Looks good right there. Let's see if there's anything else here. This is another V1. Another V1 right here. This also hits. So this is during a ranging market where we already identified it was ranging. The 15-minute might be a bit more smoother because it gives you more space to trade with each candle. It's a good idea. Thanks, E, for the heads up. Okay, so this loses. Curious if like news had anything to do with that. So maybe avoid trades during news or when there's news coming up like within the hour. So the entry was right here, came within 45 minutes. Maybe avoid these entries during news. So again, right there, I'd avoid that, even though it probably would have hit. Here are the requirements for this. Just a reminder, guys, like this isn't a set in stone strategy. It's just something that we're currently testing. So you guys are welcome to test it and see if it works. And if there's any issues with your trades, always feel free to bring them up to us so that we can find workarounds for it. Let's do this right here. This short had a loss too. I think the best thing to do is probably just avoid these ranging markets. Or, I mean, we have to test it around to see what we can do differently. Yeah, it's kind of risky to be taking these trades during these kind of conditions. Oh, actually, you're right. There was no pending sell. So these here wouldn't even count. We have one right here. But this is with news, but it would have hit. There's another one right here. Yeah, this one over here would have been a loss. I guess a couple of things that we can look out for too is if the candle's too big. Yeah, E said, but maybe the pending sell isn't required. Yeah, I mean, it might not be required. It just depends. So let's see. So those are the questions that we want to ask ourselves when we're back testing. Like when we see these losses, or if we miss a couple wins that could have been, solid wins, like would it be best if, but here's another thing too. So see how we're back in like June? Well, I'm pretty sure it was still bearish during this period. So it would have been fine. But the other trades from earlier that were back in like May and April, I'm not sure if the bias was super strong for a sell back then. So there's a lot of factors that go into determining, whether things should be done differently or not. Like for this right here, obviously we can just be looking for sells because we're going the direction of the bias, right? But yeah, let's see. PC said, why not just use simple momentum strategy with trend meter on the 10-minute and 15-minute for gold? We can use that too. That's actually what I use pretty much for everything else. Like the intraday strategy, that's all I use myself when trading similar assets. Let's see, E said maybe going for better risk reward, like yeah, no, I mean that could be done too, E. Because the thing is with the 10-minute, like like we've been discussing, it typically doesn't go into stop, it doesn't go into drawdown that much, if ever. Like for example, this one right here, right? If you were to take this trade here for a sell, and like you were mentioning, if you use a positive risk reward, so like 150, 300, or opposite actually, 300, 150, this could actually work. So this could work that way. The strategy PC was referring to. The problem with taking trades off the signal like this PC is that this candle is too big. Typically, it's going to retrace up. So whenever you get a momentum signal like that, this is why I stopped taking the pivot scalp entries, because a lot of the times the momentum signal would be too high. So this candle here is like way too strong compared to every other candle, and it tends to retrace up a little bit before it comes back down. So that's why I haven't really used it on these shorter time frames. If I'm applying the intraday strategy, I'll apply it on something like the 60-minute. So something like this right here, right? Red and red. That's where I would take it. Stop loss would be right there at the swing. Probably round that down a little bit to 1,000. This is where I would apply the intraday strategy. The shorter time frame, it's a bit more riskier because the candles are too big. Like if we're trading here on the 1 hour, you can see right here, these signal candles they're not that different because they're very similar. Stop loss right there, 636. And this is what I would trade if I'm applying that strategy. It's just one of the ones that I use on the higher time frames. What if you use pip? I don't think it would really, or I don't think it would make a difference because the main issue with this PC is the size of the candle, right? The pivots aren't going to make a difference. The size of the candle it's still going to be big. So like you were saying, if you're applying the pivots, the intraday strategy here on the 10, doesn't make a difference if the pivot's there or not, right? Candle there is still big. So the pivots aren't going to make a difference whether this candle here is too big, and this would be due for retracement, which typically happens right there, or traces before it makes its way back down. And same with this candle right here, right? So it's not really gonna make a difference, PC. For that strategy, I personally would probably use the higher time frame. I think that'd probably be better use for it, unless you have like a set TP stop loss. Like for the pivot scalps or the pivot entries, if we were to apply one of these, because it's not always going to end this way, right? Like sometimes you'll have something like this where the candle is still big, but it still plays out perfect. But trying to differentiate it's not going to make a difference because either way, they're both going to be below the pivots since the trend meter is already red. So if that's something you want to test, I mean, you can test it and see how it works. And if you find a good success ratio with it, then yeah, bring it up and we can look at it. But from my experience, I think applying that on the lower time frames is a little more risky unless you're using it with a better confluence. Like the using the pivots with this doesn't really matter too much because you already have the trend using the trend meter. The pivots are just helping you identify trend again. So these are both identifying the same thing. I think what you would have to use for this is probably something like a high low, right? Like I think this would probably be a better confluence, right? So you're looking for red pivot, red signal and red trend meter, but you have it right here breaking below. Actually, this would invalidate with the previous candle. So it wouldn't even make sense. I was gonna try to say that this was a high-low scalp, but it wouldn't fit because this right here would have invalidated it. I don't really see any other entries here. The problem with gold is that it's so choppy. Like you'll see a lot of these high lows here, but they'll get broken before. Got broken on the candle like right before it. Yeah, it's kind of difficult looking for these here. Let's see. PC said got it. We'll do so. I'm looking at strategies that are 1 to 2, if not 1-on-1 risk reward. 1 to 3 is not for me. Yeah, I mean 1 to 3 is not going to be for everybody, right? If you guys aren't patient and disciplined and wait for like perfect entries, 1 to 3 is not going to work out for you because the thing is you're going to force some trades in. You're going to force trades that you might think are there, and that's like something I went over in the last mentoring session about an hour ago with Alex, right? We talked about it because trading with a negative risk reward for like 1 to 3 it's dangerous if you don't know what you're doing. If you know what you're doing, like for me, for example, I'm taking like 1 or 2 trades a day. You guys can do that because you're looking for quality trades. The problem with trading with something like that is that you see the potential, you see how many wins you take. And what happens is a lot of people get greedy, right? Because you see that it's so easy to win these 1 to 3 trades that instead of just going for 1 or 2 trades, which you win, you start going for 5 or 6 trades. And then sure, you'll have like 3 trades that win back to back. And then once you have 1 trade that loses, you're going to be set back and forth. You're just pretty much lost all of your profits. And then you're back to like 0. And then from there, if you have another loss, you're going to end up in a deeper hole. So yeah, I would recommend just figure out what works best for you, PC, and stick to that. If you know our normal scalp strategies don't work for you, then that's fine. Just find something that does work for you, which could be one of the intraday strategies, or you can focus on just V3s that are typically going to be 1-to-1. They don't happen very often, but when they do happen, you know, most of the time they do hit. So yeah, no need to force any specific type of trading strategy on yourself. It's more so just finding something that really works for you. Let's see. You said 300 to 100 seems to win every single time, but not sure if the risk reward on gold is that good. Would love to find some good RR equal. Would also allow us to use a variety of other brokers since it's not scalping. Yeah, no, I agree. I think it's, you know, I've been looking at a lot of these like one-to-one strategies, typically like the ones on US 30 on the 15-minute, and then now this one on gold, which seems to work pretty good. I mean, I think you'd probably try a 1-to-2 on this, maybe 150 to 300, because it does seem that it works very well. Let's see, Patrick said, to be honest, a lot of the variations freak me out. When, for example, we're looking for sells, but price is above the pivots. How much do you weigh that in, Sean? So the pivots do, and I get that same feeling. I totally get what you're saying. Like, say that we're looking for a variation right here, right? I'll show you something on the 1 minute, which is something that we would typically see. So let me see if we can find one over here. So we did have a sell bias this morning, and price was above. Just want to find an example here. Like, I think like this one right here, right? This was like a V3 or something. Yeah, so this V3 right here, right? Like some of you guys did take this trade and you guys took a huge win on this. And this is exactly what Patrick is referring to, right? Because there's a lot of red flags here. Like one of the red flags that the trend meter is green, and it's above the pivots. So this does kind of trip me out sometimes. I don't put too much weight on it, but it does make me question the trade. That's why for this right here, when I saw this happen this morning, I didn't take it myself because I was like, okay, I don't feel comfortable with it because I'm not sure if it's done pushing up, right? I was worried it was going to push back up, but it didn't. It actually pushed right back down to TP. So I don't put too much weight on it. It just depends on like when it comes up. So if it comes up right here, right on open, and we're expecting it to come down, like for example, we had retail sentiment super down, fundamentals were super red, and there was no reason for it to push up, right? So in that case, I probably wouldn't put too much weight on this here because I did tell you guys about this trade. I just didn't take it myself because I didn't feel comfortable with it. Depending on when it comes up, like say for example, if the overall bias is bullish and this comes up, then yeah, I put some weight on it. But if the overall bias is opposite and price was basically manipulating coming back down, then I wouldn't put too much weight on it because I do expect it to come down. So it's just really, it's on a case by case basis, like depending on like where you see it. I know for right here, it's obviously going to be obvious because we were expecting it to come down. But let's see for another one here. Like, see if there's another one that came up here. I think there was. Like this right here. I think this was the same one that I took. This was the V1 that I took. One second. Sorry, guys. Man, this freaking COVID is getting to me. Anyways, so this one right here was one where I wouldn't put too much weight on it. And this is the same V1 that we took this morning, right? I believe so. Yeah, this one right here. Or actually, no, it wasn't. I remember we did cover this V1 here, but I didn't take it because it was too close to the sessions right there. Even though it did hit TP. Actually, no, it didn't. This is one that we didn't take. So I take that back, actually. We didn't take that trade because it was so close to the sessions. The one that we did take was, I think it was this one. think it was this one, right? Yeah, I think it looks like it. No, it's not. It's the next one. Where did this come from? Oh, it was like later, like around 750. But anyways, I was just gonna use this as, or I guess I could use this as an example. So for this right here, if the sessions wasn't at that point, I wouldn't give too much weight to it because I would have figured, okay, it's going to drop down to hit that point because the overall bias was so strong for a sell. So the main time that I don't really put too much weight on it is when the overall bias is for a sell and we're expecting it to come down. The only time I really put a weight on it is when there's indecisive bias. Like say, for example, sentiment here is 54. This is still indecisive. It's not very strong. But say the fundamentals here were like um, at like 60 points, where it's not like obvious what direction it's pushing. So if it's like that, then yeah, I'd put some weight on it. But for example, this morning was very red. So I was expecting it to come down and I wouldn't put too much weight on it because I was expecting it to come back, below the pivots. So those are the differences when I do put weight on it and when I don't. But it's really going to be case by case basis. Like lately, we haven't had a strong bias. Like today, even today wasn't very strong. It was a sell, but this year wasn't like above 60%. So this is where it becomes a bit risky. But if everything here is pointing towards one direction, that's when I don't put weight on it. But the pivots do play a role, right? You guys have seen it before. Whenever price comes above it and they start to spread out, it starts to push up even higher. Vice versa, when price comes down and it starts to spread on the opposite direction, then it continues to push that way. So yeah, it depends, which I know everyone hates that answer. It depends, but it really does, especially during these conditions because it's such a choppy market. It's not very smooth as it was, earlier this year. Sure, no problem, Pat. I know it's kind of confusing, but I'm sure you get it to some extent. Okay, E set in the last 24 hours, it worked great on GU, but it was trending. So not sure how consistent that would be every day since FX pairs aren't always trending. Yeah, and I agree with you too, E. So I think for that strategy that we were looking at, this one right here, basically the variation on the 10-minute for like basically any pair, it would work really well when price is trending. But I think you need to confirm that it's actually trending before you apply it. So like what you could do is you can go on the higher time frame, like say the 15, and you can identify what the trend's like, or you can always just if you really want to see what the trend is on the higher time frame, you can always just go to the trend meter and you can change the settings. Not that I recommend you do it. I probably just go eyeball it off the other time frames, but you can also change this here. So if you want to see what it's like on the 15-minute and 30, or say you want to do 15-minute, 30 in the hour, this will show you that it's trending, right? So it doesn't matter if you're on the 10-minute or if you're on the 15-minute or 30-minute, it's still going to show that it's in a downwards trend. So like, for example, if you were to see this trade right here, oh, this is live. So there's actually a V1 that's running right here. If it closes, but it is aftermarket, so it's probably going to be very slow from now until like London. I was trying to use this as an example. I don't see anything else here. Forgot this was a live market right now. Here's another example right here. So if you have the trend meter settings to this, and maybe this is what we have to change it to so that we can see if it's trending or not. We just want to see where price is going to go for the next hour. If it's going to be red down here, then you're going to be looking for a sell. And you could use that same parameters that we were talking about. Let it run. And TP right there. Yeah, so this is, I think in order for us to figure out if price is going to be trending or not, or if it's going to be moving sideways, this is probably what we're going to have to play around with, the trend meter. And I think these settings right here might be good. Since we're expecting this trade to hit within the first, 30 minutes to an hour, I think this would be pretty solid because if we can see what the trend is looking like 60 minutes out, an hour out, then we can identify which direction to be trading in. Aside from the bias here is always going to be a sell for a while. Yeah, iPhone's asking, so trend meter helps for this. Yeah, I mean, it's part of the strategy. So it's the first requirement that you're looking for. So maybe I have to change that. I have it set to setting this chart. We might have to change this to something else to, and I kind of want to find a losing trade now. So let me go back real quick and see if I can find one. Actually, let me go through the chat and make sure I'm not missing anything. E said, lately I've been trading the NASDAQ instead of US 30 since it doesn't move as erratic. I take a breakout on 25 pip stop loss, 50 pip TP, and I take V3s, etc. with a 15 pip stop loss and 7.5 pip TP. It's been working out very well. I don't enjoy trading US 30 anymore. I've been wicked out far too many times lately. Yeah, and that's the key too, guys. Like a lot of these strategies work on other assets, right? It's not just for US 30. So like with E over here, E's been trading NASDAQ, which is perfectly fine. NASDAQ is very similar to US 30, but it doesn't move as crazy, right? Because it's a bigger index. It's 100 stocks. So you're not just going to have one stock spiking price up or down like you do with US 30. Same with S&P. If you guys are not comfortable with US 30, you can always trade something like the S&P 500, which mirrors it. But yeah, I mean, other than that, I guess I could see if I could find another thing here. But I think this trend meter setting might be the game changer here with identifying good or bad trades. I mean, it's looking at this here, all these would have win-win. Kind of wish I wrote down that day where that trade lost earlier. I'll have to back test it a bit. So, all right, guys, if you guys have any other questions, feel free to put your questions in the chat. I don't want to waste too much time on this session back testing this if this isn't something but a lot of people want to cover. But if there's anything specific that you guys want to cover, you know, feel free to put your questions in the chat. Let's see if there's anything else here. Yeah, I don't see anything else here right now. Well, let me just go back a little bit. I'm like purposely looking for a bad trade here to see if I could find if this setting actually is beneficial. Let's see, PC is asking how much stop loss TP did Sean use in the previous example? Are you talking about gold, PC? So for the previous example, we're kind of playing around with 150 pip stop loss, 300 pip TP. So it's a 1 to 2. Typically, it doesn't go in a drawdown, so I mean, it could possibly work. Let's see. There's a signal on there, so no use. Yeah, whenever I do these back testing, guys, I like looking for losses because the losses is what really helps you understand what could have been done differently. So like this right here, I mean, obviously there's no trade because the trend meter is green. I mean, it's blue. I want to see what it looks like if it was back to. All right, so for this right here, if the trend meter was set to chart, this would technically be a buy, right? Which would have hit stop loss. So as you can see, if you would adjust your trend setting meters over here, or trend meter settings to 15, 30, 60, or 1 hour, we would have avoided this trade here because there was no actual trend. So you guys can see the difference here, right? This is how I backtest and this is how I master the strategies. You know, we come out with a baseline of the strategy, basically a rough draft. We start to figure out what can be done differently to avoid these trades. For this right here, we change the trend meter settings and now there's no entry. So with there being no entry, we would have avoided this possible loss here. And that's how I increase the win rate for these strategies that I show you guys by pretty much getting all this stuff down, like basically the data. So yeah, I think that's pretty solid. Let me just change that then now. And if anything, we can switch it back. I mean, I'm always looking to find ways to make the strategy better. So I'm gonna have this settings are now chart 15, 30, 16. And I think this will be helpful. Yeah. So I mean, every day will get better. Like, you know, the more and more we backtest this, and this is why I like having these mentoring sessions, because you guys can run questions by me, like, hey, Sean, this trade lost. What could I have been done? What could have been done differently? And if that's the case where, like, you know, the trend meter just needed to be changed, I mean, that could have been the main change there. So let me see if there's anything else here. Yeah, Patrick said that's interesting. I wonder if that would help higher timeframes on US 30 ranging markets. Yeah, I mean, it could too, right? Maybe that's something that we can change because we don't really change. The thing is, we don't really use the trend meter for US 30 anyways, unless you're applying a specific strategy that requires it. But yeah, if you wanted to identify that, we could do that too here. 5, 10, 15, something like that. Like if you wanted to apply any of these V3s, like we already have a bias for sell, possible V3 right there. So I mean, this would work here as well. Just identifying where. But don't change your requirements just because like we came up with this right now, guys. Right? Just make sure that this is like I'm just showing you guys that there's different possibilities. Like you can change settings like by a little bit, and it'll make like all the difference that you need when identifying certain trades. Like for example, here for a buy, there's a V1 right there. So this is green right here. I don't know if it was green before. Let's see. So it actually was already green. So it kind of would have fit into place with it. Applying that there, letting it run, full TP there too. So I mean, there's a lot of different ways to do it, little different combinations. A lot of times you just need to change the settings just a little bit, and it can make all the difference when looking for trades here. Let's go back to gold. I think I marked one up over here, right? So this one over here, I think did close. So I'll just follow that. But other than that, let me see if there's anything else here that I'm missing. E said, could you show the trend meter settings again, please? Yeah. So I just changed it to 15, 30 minute, 1 hour. The reason why I came up with these numbers is because I was trying to figure out the distance between when TPs usually hit. So basically, I would see that TPs would typically hit within an hour range, which is about like 7 candles, right? Or 6 candles actually. This is generally the time where we see the trades hit TP. So that's where I set it to, because I only want to see what the trend's going to be like, you know, an hour out. So that's why I had it set to 15 minute, 30 minute, and 1 hour. But eventually you can probably play around with it even more to figure out, you know, if other times work better for you. Rashida said, change the chart. So this is what I have the trend meter set to, Rashida. You don't have to change it to this, but this is kind of just what I'm playing around with. If this doesn't seem to work, then I'll switch it back to same as chart. But for right now, this is kind of what we've played around with, and this looks like this might be helpful when identifying when the market is trending or when it's moving directional. Because the trend meter here will be red. If it's blue, this just means it's trending. I mean, it's ranging. And you can see right here that it's pretty clear that price is ranging at that point. So it's just helpful to avoid trades around that period. Yeah, he said maybe things like 5-minute V1s with different trend settings, or maybe the same to provide more entries would be good too. Yeah, I mean, it could. There's just like a few things that you can change here to play around with it. I mean, there's always going to be different types of settings that you can change depending on what you're looking for. So if you're really looking to make sure that you're not trading when the market's trending or when the market's ranging, then this could help. But I think during the live, we do a pretty good job of identifying when the market's trending. So it's not really a big deal because I'll typically draw the high lows, and then you won't get caught in the trend in the ranging market anyways. I typically warn you guys if I do see it as trending or not trending, consolidating and ranging. Let's see, another question here from Tyler. Tyler's asking, Sean, so even when you have overall bias, how often do you take a trade against the bias, like the last US 30 buy example? How high risk would you consider that with the buy being firm with the momentum of the V1? So let's see, I'm trying to look back to which one you're referring to, Tyler. I think you were talking about one of these over here, right? This one right somewhere around here. So let me just go back and reread your question, because I know we did have a sell bias pretty much all day today. Let me check the fundamentals real quick. So I don't think it ever shifted to a buy. It was still a sell, but it just wasn't very strong. So for Tyler's question, Tyler said, Sean, so even when you have an overall bias, how often do you trade against the bias? So I typically never trade against the bias. I don't even trade after 8. So like, even though these trades here came up, I wouldn't have been trading. But for me, I personally never trade against the bias. Like if there's a bias that is clear, like for example here, this, during the market close, it was 164 points in the red. And this here was indicating, even though it was a strong bias, it was still like somewhat of a sell bias, right? Because it was 54% long. Whenever there's a clear bias like this, I don't trade against it. The only time I trade against it is if there's like a very weak bias. So like say, for example, this here was like how it is now. It's at 54%. And then say this right here was at like 20 points in the red, right? So it wasn't a strong fundamental. It wasn't a strong retail sentiment. Then in that case, yeah, I would take a buy here if I saw something really good. But that's the only time I would take a buy. I wouldn't necessarily go against the bias. I would go in whatever direction the trend is going, because the steps here for overall bias, like if this doesn't meet retail sentiment, then you kind of have to just ignore that. If the fundamentals don't meet either, you kind of just have to ignore that as well, right? The last thing you can look for if you're really looking to enter a trade would be the technical bias. So for me to find an entry here for a buy, the main reason I would take it was only because trend meters red or prices above the pivots. So that's like the only time that I would typically go against some sort of overall bias. Like say, for example, this wasn't here. I mean, this was like at 0, but this was still a sell. That's the only time I'd go against it, but not necessarily when there's like 2 confluences that are in one direction. Yeah, no problem, Tyler. Let's see. Yeah, no problem. Got that. E's asking, can you check out the NASDAQ 100 with my parameters, 250 pip stop loss, 500 pip TP? Yeah, sure, no problem. So let's take a look at US 100 real quick, which is the NASDAQ. So basically for E over here, E's using, so E uses a 250 pip stop loss, 500 TP for breakout. Gotcha, okay. So for the breakout here, I'm not sure what the bias was this morning because I don't trade NASDAQ at all, but looks like it could have been a solid sell here, like without using bias and just using everything else. Gotcha. Okay, bias today was a sell. So for this one right here, I probably wouldn't take this candle. That actually wasn't even the opening candle. This candle here is too huge, so I wouldn't have taken this. Wouldn't have taken that following one. Wouldn't have taken that one either. This looks like the entry for the breakout. Not sure if this is one you took, but this looks like the breakout entry right here. You said you use a 250 or use a 500. 250. Let that run. Did pull back a little bit, went straight to TP. So great entry right there. It looks like it was a lot smoother than US 30 for sure. And then following through, if there was any other entries here, let's see. This thing is dumped down pretty heavy. There's no V1 there. Oh, there would be an entry on that. Looks like there might have been a V1 right here. And looks like you got close, but not exactly. V1 right there. So I'm not sure what your TP stop loss would be here for a V1. It's kind of hard to do a positive risk reward for these specific types of entries, but we just use our normal US 30 parameters. Looks like, what if it's stop loss? Oh, gotcha. Okay. Yeah. So you said I stopped trading after that because MFF was being weird. It's just been doing 150 stop loss, 150. Okay, gotcha. Yeah, I mean it keeps it tighter, so you're not really risking as much. But I think Nasdaq is still pretty crazy too. I know it looks like a lot smoother, but I think it's still moving kind of crazy too. So like let's see from 6:30 till 7. Same thing over here from 6:30. But I mean obviously US 30 does move a lot crazier. 6:30. It did have some crazy movements on open. So like about 7, right, for you. Yeah, but this was a lot more choppier. I could see that. Gosh, yeah, you said I just never feel like I get whipped out on NASDAQ if I lose. I lose because of a bad trade. Yeah, and I could see that too. I know I've traded NASDAQ before too, and it seems a lot smoother and it doesn't seem as scary as US 30. I think for me, I'm just so comfortable and used to US 30 that I'm good at just avoiding trades that are likely to lose. But everyone has a different preference, right? Um, yeah, I mean, if there's anything else you want me to cover for NASDAQ, I could, but I'm not typically a normal NASDAQ trader, so I'm not familiar with like what the range would be or what your TP stop loss would be typically set as. NASDAQ was like a lot easier to trade during COVID because you can literally just buy it and it would like you wouldn't even have to think about it, just hit your TP. But yeah, I'm not too familiar with like how NASDAQ moves. I know it does move smoother than US 30, but I'm just not familiar with the movement, so I can't really pick out things here. Even though I do see certain movements here that look pretty solid. It's like gold trade running. Gold trade is still running right here. Some drawdown right now, but still currently running. So we'll test that. I'm not in the position, but I'm just testing it to see how it runs. But yeah, guys, if there's any other questions, feel free to put your questions in the chat. We've been on this mentoring session for about an hour and a half. So if there's anything that you guys else want me to cover, feel free. Otherwise, we'll probably wrap this up soon. But I think this was a pretty good session, guys. So thanks for all the tips. I think I'm going to keep playing around with gold. I'm not going to trade on any of my live accounts yet, but I'm going to keep playing around with it to see what I can find. I mean, overall, it still looks pretty solid how it moves. Not sure if I should, put this back to how it was previously. I think I will for now. I'm just gonna set this to how it was previously before, and then if I feel the need to change it back, then I'll change it back. But I think for right now, I'll just leave it as is because it's been working pretty well lately. And then I will try to give you guys an update whenever I start to take it on my live accounts. Let's see, question from E. He's asking, have you ever traded SPX, like the V1s, etc. on there? I haven't personally, but the spread is amazing. Yeah, SPX is just like, well, SPX is the S&P 500. So it's just like the baby version of US 30, right? It's going to be less volatile because it's 500 stocks instead of 30. So like not one stock is going to push it up or down. It's going to take quite a bit to have some movements, but yeah, SPX pretty much moves the same way. It's just worth less, so you can trade it with smaller risk, smaller margin, and it's a bit smoother because there's more stocks to it. But if you were to put them right next to each other, because they're literally the same thing. I mean, US 30 versus, and you want to do S&P, or I mean, it's the same thing. So if you were to line these up together, SPX typically mirrors US 30. Why is it? So you can see here that's kind of similar. It's just, I mean, I guess it's supposed to look like this. So you can see it moves kind of similar. It's just, it's a little more messier. I mean, it's a little more smoother. US 30 is more messier because you have like only 30 stocks in this index. So you'll see it spike up a lot more, spike down. For SPX, it's a bit of a smoother move. It's like a push up, push down, push back up, and continue to push along. Yeah, for currency.com, it's US 500. There we go. Yeah, you can see it here because the data here is more aligned. So these are both from the same broker. Basically SPX, which is S&P 500 versus US 30. It's pretty much the same thing. It mirrors each other. The only reason I would trade SPX or that I would trade it before is because I had lesser, like a smaller account. So I couldn't handle US 30. But now that I have bigger accounts with FTMO and MFF, I'm able to trade on US 30. But it's pretty much the same thing. All right, guys, I think that's it. I need to get some rest. I still got this COVID I got to get over. So hopefully this COVID goes away by the end of the week. But yeah, if you guys have any other questions, feel free to reach out. Otherwise, we'll be back here tomorrow morning for the next live session. And then for next week, we'll have another mentoring session. So if you guys didn't have your questions answered today, don't worry, I'll have them answered by next week. Or if you guys want to send me a question, I can cover it during the live tomorrow. But I think for now, I'm going to go get some rest so I can stop coughing and be ready for the mentoring session or the live session tomorrow. So, all right, thanks guys. I will see you guys tomorrow. And if you guys have any questions, feel free to email me or message me on Telegram. Just keep in mind that I'll be resting, so I'm probably not going to be able to get to you right away, but I will get to you guys eventually. So have a great